So let me just start with a connection of yesterday, because we were talking about index insurance, and we flagged that there were some supervisor risks that were associated with this kind of innovation, and consumer protection was a very predominant topic. Our colleagues from Kenya, and I really appreciate Mary and Lucy what you shared with us. Um, Share that effectively there are prudential issues that concern them in terms of like the interventions that have been offered in Kenya for a long time in terms of index insurance. Those concerns have evolved over time, but there are like very important elements on consumer protection that concern them as well. So what we want to do today is we have just an hour, and it's such an important topic. So we really hope that you have attended the module, and now we're going just to really to try to pick some of these elements into a couple of examples. So we're going to have Zimbabwe and Ghana who are going to present a little bit their situation with index insurance, and we're going to pick those elements on consumer protection, and then we're going to have a case study to really put in practice all these elements that you have already gathered from the model. However, I want to just to bring some elements that you have seen in the model, which are related with our three-layer approach, let's say, that is connected with a supervisory, like a risk-based supervision approach. So we know that we were a big, like a trick, let's say, to implement the proportionality principle is really to understand the market, identify barriers and opportunities. So it's that snapshot that we have talking about, then identify and assess the supervisory risks that are associated with this innovation. And based on that, it will be very feasible for supervisors to adopt proportional approaches to address those risks, and maybe identify that some of those risks could be addressed through different ways, maybe some through consumer empowerment, maybe through maybe some tools of self-regulation of the industry. So let's just keep this framework for this conversation of today, and let's keep it specifically for the topics of index insurance and technology or digitalization. So this implies identifying the activities that those entities carry out, identify the innovation that is brought by index insurance, identify those risks, and then implement those measures. So just wanted to make sure that we all have these on top of our minds during this session. Something as well that is important to consider in this session is an important message that we wanted to convey. I think that it was really on Monday or Tuesday that we talk about is, if we want to strike the right balance between promoting the development of inclusive insurance, for instance, through an innovation like index insurance that we have seen that might have some benefits in order to promote access to insurance to certain unserved and underserved populations, or through mobile insurance, as Kofi shared with us on some examples, and we did a case study around this, we need to make sure that the customer journey is a hassle-free customer journey, but a customer journey where the consumer is effectively protected through all these stages. So from the moment that they receive information, when this information is disclosed by the providers, it has to be transparent, simple. They might have to be able to understand that they are insured, and they will have the tools to use the product and benefit from them. So this customer journey needs to be hassle-free, but it has to be that hassle-free needs to be provided in a responsible way. Then we have the other side of the coin that we talk about it. So in order to protect consumers, we need to make sure that the products there are suitable for them, have value for them. And that means that we have to look at the provider side and understand what is happening in terms of provision. What type of products are being offered there? Are these products really providing value? Are these products being offered in a fair manner to consumers? So consumer protection really calls us to understand the consumer effectively, but also the provider. Because if providers do not really get this and do not really understand the consumer, it will be very difficult to have products in the market that will be tailored to them. So let's see the consumer protection perspective, a little bit like a broader, and let's try to include as well the value that the products have in the market as part of this kind of protection. We're going to talk about this a little bit more in this session. Well, of course, the question of the million-dollar question here is like how, and I think that we have been sharing several tools. Coffee yesterday shared some elements around digitalization. We heard our friends from Kenya sharing how they have struck that balance in index insurance. And for this session, before starting with your case study, I wanted just to ask Rashid, maybe if you would like to start sharing a little bit the experience of Ghana. So you had this innovation, you are seeing index insurance schemes probably being developed in your country. You have identified that there might be some concerns. What have you done in that respect? So Abdul Rashid, if you want to take over and share your thoughts on Ghana, please. Thank you.
Sorry, Andrea, can you let Zimbabwe start?
Yes, sure.
Yeah,
perfect. No worries. Zimbabwe, are you ready to share?
Sure. I think we can share.
Excellent. Please go ahead. Thank you.
Thank you. Just a minute. Let me try to share the screen.
Thank you. And for everyone, I know that yesterday we had quite a limited time. So if you would like to ask questions as well to our friends from Kenya, and obviously now we're going to see from Zimbabwe and Ghana, please keep doing that through the chat. Yeah, Robson, please go ahead.
Thank you very much. So I noticed that I've got 5 minutes and I've got a couple of slides, so I'll try to compress the information. So I think one thing to highlight is in Zimbabwe, we currently have a number of index insurance products. Most of them initially, most of them were focusing on rainfall index, but with time, I think the providers have identified some gap. So there's now an increasing trend towards the yield index, something like that. So I will focus on one of the prominent products in our country, which is based on rainfall index. The product is called the Rujowa Inshona, which means shield or protection. So this product was developed by a consortium of international companies, and it was prototyped in Zimbabwe through one of the big insurance companies, which is Old Mutual. So initially, the prototype was tested in around 2016, and by 2018, the product was launched full time. So in terms of stockholders involved, there were insurance companies, which is in Zimbabwe, Old Mutual, a number of reinsurers, individual farmers and associations, NGOs, aggregators, suppliers of input, community leadership, and weather technology companies. So the product covers drought and excess rainfall. I think the understanding was not only drought affects the small scale farmers, but even excess rainfall to a certain extent will also affect the yields and stuff. So the product is actually a micro insurance product, if you want to classify it, because it's also focusing on the small scale farmers. I understand that we are trying to move away from micro insurance to inclusive insurance. Possibly I will try to use those words here interchangeably. Then in terms of how does the product work, so it's basically a low cost and accessible insurance solution to protect against uncertainties of timing and amount of rainfall. It measures droughts and excessive rainfall via a satellite system every 10 by 10 kilometers in different wards. The farmers and insurers agree on the definition and parameters of adequate rainfall required for specific crops during the agricultural season in accordance with the best farming practice or requirement. So you will find that the conversation is actually informed by research to say in this region for this crop, this is the amount of rainfall that is required. And then there's sort of an agreement upfront to say for whatever trigger, the rainfall should be within this range or something like that. So if there is inadequate or excess rainfall in the agriculture season, the farmer will be paid in according to the extent of the impact and loss caused by the drought or excess rainfall. So one thing to note here is the farmers will be compensated for input, for cost of input. So the sum assured will be looking at possibly your seed cost, fertilizer, pesticides, and herbicides, and it does not focus on the expected output. Why the justification behind that is input is one of the key costs in terms of farming. And if you experience drought or excessive rainfall, you may not be in a position to recover in the next season. So this product is sort of trying to at least ensure that if there are any perils affecting the farmers, they must be in a position to come next season. So at very high level, how it works, let's say you are a farmer, a maize farmer in a certain region, you agree that possibly, hypothetically speaking, maize requires about, for early planting season, you require about 100 millimeters of rainfall within 2 weeks. These are just hypothetical numbers that I'm giving. So if you, within that period, you then receive 50 millimeters of rainfall, it means that you are starting on a bad start. Your maize may not be germinate good enough to give you a good yield. So the product will then define to say, if you receive a rainfall within this range, you then get a compensation of a certain percentage of your cost of input. And then it then goes to the mid to period, and then the late period, where you then expect to harvest and stuff. So that is at very high level how the product works. So how many people are covered? So I tried to extract the numbers for 2020-2021 season. I think you will find that the Zimbabwean dollar number of the number of farmers under individual arrangement, it's the amounts they are in Zimbabwean dollar. So don't get so excited about them. I think the exchange rate at the moment it's 1:88. So you may need to divide that number by 88. And then it's covering about 762 farmers. Then from aggregator distribution platform, it's covering about 6,144. So in terms of aggregator, we are looking at those farmers who are being subsidized by your NGO, your NGO and stuff. So they are being put together, and then they are provided with inputs and also with this sort of insurance coverage. Then what are the main challenges? I think the main challenge that we picked since the product launch, I think to date, I think issues around perception about insurance, especially from a small scale farmer's point of view. To say, will really insurance pay me if I experience a claim? And also lack of confidence in the insurance sector. I think in Zimbabwe, I've also talked about the issues of legacy issues where there are current changes and all those issues. Then basically lack of awareness among the targeted farmers, especially on your small individual farmers, to say some of them do not even appreciate or are aware that this product exists. I think you can even see from the numbers that I showed from the previous slide. And then another issue that we also picked was in terms of this whole arrangement, it did not include government. But if you look at the model that we use from a farming point of view, the government plays a very pivotal role in terms of supporting the smallholder farmers, in terms of providing inputs, in terms of providing support and stuff. But this product was launched from a private point of view. So that leg or that gap between the government and the private, I think it also creates a challenge. I wish if government was involved, it was going to the numbers were going to be better. And also issues around the changing weather cycles, also issues around drought being a rare event. Like in Zimbabwe, we used to experience on average once or twice drought every 10 years. So as a farmer, you'd ask yourself, should I pay a premium for an event that I know would okay possibly after 5 years or something like that? But when that drought okay, usually it's by surprise when you are not prepared. And also issues around diverse crops that crops with different weather. For example, there are some crops that thrive better in low rain period, and there are some that thrive better in excessive rain periods. So farmers would then decide to say, this year is projected to be a drought period, so I need to plant sorghum instead of maize or something like that. Then also issues around complexity of the product. I think I've tried to explain it at very high level to members, but you can imagine someone who is in the rural areas trying to explain to him that, or to her, that you rely on satellite and measure the amount of rainfall, and if this event happens, it will trigger a claim and all those things. Then in terms of lessons learned, I think issues of confidence that I've talked about is one of the key issues that we are trying to see our best to increase confidence. But I think of late, because of those farmers who have experienced losses and they are now being paid, I think some farmers are starting to realize the value of the product. And also in terms of dissemination of information, I think there is a mobile game that was developed with the objective of raising awareness within small-scale farmers and communities on weather index. Just try to demystify the subject and make the concept a bit as simple as possible. And also frequent of communication, education, and sharing seasons updates to say, what are we expecting this year? Are we expecting excessive rainfall? Are we expecting a drought? What is it that we can do to ensure that we protect ourselves and stuff? And also issues around customer education, continuous, not only waiting for a period when you expect farmers to come on board during the planting season, but even throughout the year, just continue to engage them. And also a dedicated team was set aside in terms of addressing issues around basis risk. I think this was also mentioned in yesterday's presentations, where we are saying the performance of a yardstick vis-a-vis what is actually happening on the ground. So there's a lot of investment in this space to share with farmers so that they appreciate. Then what was your initial reaction? I think as IPEC, when this product was launched, I think there was a bit of hesitation at first, I think due to complexity of the product. I think we also had a bit of time trying to understand how the product works and even the perceptions from the customer to say, would they really understand this product after being trained and stuff. And I think the concerns basically were around the complexity of the product and whether the market was going to accept the product and stuff. Then what supervisory risks are currently associated with index insurance? I think one of the key risks is around market conduct issues and where the client seems not to understand how the product works. So you experience a drought, there's a trigger there, and you are supposed to get possibly a percentage of your input cost, but someone was then projecting to say, I'm expecting a yield of this much. So if I get compensation from an input side and ignoring the yield side, is it a fair product or something of that sort? Then also insufficient tools to measure effectiveness and suitability of the product. I think issues around reserving risk, data challenges, or climate risk, and also technological risks. I think also our current legal framework does not cover index insurance, and also there is no dedicated framework in our market, but actually we're working on that to make sure that at least it's covered and it's also regulated from a legal framework point of view. So what steps have been adopted to address those risks in proportionate way? I think the first thing was for us, so historically what we used to do from Zimbabwe is an insurance company will submit a new product for approval, and that product will then be looked at by a specific department. If it's an insurance product, it will then be reviewed by insurance department team. But of late, we realized that we need a product approval committee that is made up of skills from different teams, your actuarial teams, your finance teams, your insurance team, so that at least we can come together and evaluate the product in a more holistic way. And we are also amending our Insurance Act, and we have also formulated some working groups to work on the index insurance. I think we are also getting a tremendous support from the World Bank on the index insurance, and also mandatory training and dissemination of information. Also try to rely on testimonial from those who have received claims, and also continue to improve our data and make sure that the product remain relevant. Training and also insisting on adequate disclosure to the regulator on a regular basis, so that we can also keep on improving our understanding of the product and see the gaps and areas that need improvements. So I think basically that's it from Zimbabwe, and thank you. I hope I have not exceeded 5 minutes. Thank you.
Thank you very much, Robson. That was very, very nice, and I really like because in this presentation we could see that process, the process of like these are the issues, this is the product, those were the lessons learned. As you mentioned, there were like issues very related with consumer protection. I want to flag for our session today something that you said. There were issues about perception, lack of confidence, lack of awareness, complexity of the product. You mentioned as well that the product probably have like some complexities in terms of value, because even though we know that insurance, this type of products really are catastrophic products, maybe the modeling wasn't like perfect, and they didn't have a lot of payouts, and people kind of lose trust when they don't see that the product is honoring the promise, let's say. Also, something I think that was mentioned through the chat, I think that was that the fact that the product apparently is a little bit expensive, 15%, so the affordability. So I want to flag that, but I really like the fact that you highlighted as well on solutions. So there were gains, there were like a lot of efforts in terms of communications, try to enhance the value of the product with testimonies from those who have received payouts, and really focus on this understanding element that is key, and how you are like translating those elements into specific measures on regulation and supervisions. Thank you very much, Robson. I don't know if there is any question from our attendants here in the training. Well, if not, just please share. Yeah, Edwin. Yes, please go ahead.
Yes. No, thank you, Robson, for your presentation. I might have missed some of your solutions at the very end, but I just want to have two quick questions. You indicated that for the policy to commence, there's an agreement between insurer and farmers. I just want to understand to what level, to what extent do farmers understand that agreement? Because you indicated that the insurers and farmers do agree on definitional parameters. Is it something that is fair to the farmers? Then the second one, you said, I think you mentioned as a challenge that government is not involved. I don't know what are your plans around it. As I mentioned, I missed the part on the solutions. Thank you.
Thank you very much, Edwin. So I think, as you are aware, that for any insurance contract to be effective, there must be an agreement between the insurer and the insured. So in terms of understanding of the agreement from a customer point of view, I think we have got a standard agreement. They've got a standard agreement. But what's key is to say, for a crop that is planted in a certain region, this is the expected amount of rainfall, as informed by the experts in those specialist areas, and also your weather, your meteorological department guidance. So once that is put forward before the agreement is signed, then it becomes a binding agreement. It's not really like the company would then come and say, possibly we expect 100 millimeters of rainfall, but that must be supported by experts. And if you see for a certain crop, for example, if you are planting a sorghum and if you are planting maize, those two products kind of require different amount of rainfall for them to grow well. And if you then look at two different regions for a certain product, I think some can thrive better in low yield areas with a certain amount of rainfall than in high yield areas and stuff. So those variabilities, we insisted that they must be agreed upfront, so that it's not one size fits all across the regions and across the product. But in terms of the agreement, it's something that we've looked at and agreed in terms of all the issues that must be explained to the client before onboarding. Then in terms of involvement, sorry, my apology. So yeah, I think, as I highlighted, that the product was initiated by private companies. I think what we are seeing at the moment is also government's keen interest to come on in that space through some insurance companies which are related to government. I think we have got your agricultural insurance company in Zimbabwe that was recently launched to specifically cater for those small farmers through the government support and stuff. Thank you.
Thank you, Robson, and thank you, Evan, for the question. Let's go very quickly with Abdul for Ghana. Let's try to make it really 5 minutes, and I'm sure that we're going to pick some of these elements during the conversation. So yeah.
Thank you, Andrea. Please, can you see my screen?
Yes, we can.
Great. So, okay, so in Ghana, we have an agriculture insurance pool that is superseding or championing the agri insurance program. This was established in the year 2011, and the stakeholders are the Commission, Finance Ministry, Agri Ministry, representatives of the Ghana Insurance Association, the farmers, and other development agencies and partners. So for now, there are two main categories of index insurance that are being distributed by the Ghana Insurance Pool. These are the index insurance and the area yield insurance, and the products are designed to support smallholder farmers, and the product best suits cereal crops and other leguminous crops. Okay, in terms of how the product works, the product is supposed to cover the plant from germination to harvest, as in the flowering and maturity stage. We all know scientifically every crop requires a certain amount of water and nutrients over a period of time to flourish or to be able to develop well. Anything short of this amount of water or nutrients is actually going to result in poor yield or no yield at all. So the farmers and with the help of GUIDE, they mount weather stations and other satellites that will help pick the index signals to be able to determine payout. In terms of challenges, like all other agri insurance products in Ghana, we have challenges with the basis risks and high illiteracy rates in terms of understanding the complexity of the product, financial problems as in high cost of premiums because agri products in Ghana are not subsidized, and we also have issues with data. Credibility of data that will help us underwrite the products to help the farmers is lacking. And the lessons we've learned is that we need to encourage people to take farming serious. Most people just look at farming as an alternative and a part-time business. So we want to encourage people to take up farming as a full-time business and give their attention to it. In the beginning, when the issues of this came up, Ghana decided not to open the floodgates because agri insurance is a high risk area. Hence, they need to put together the pool so that insurance companies can put together resources to underwrite the products instead of allowing each and individual insurance companies to underwrite on their own. The supervisory challenges we have, like I said earlier, also includes reputational risk and also basis risk in Ghana. And the steps adapted to help improve this are the fact that we have a new legislation, we are training and we are dialoguing with the industry to see how we can put up new insurance products that will help the smallholder farmers. And we are looking at technology as well. We have inclusive insurance and innovative provisions in our new act. So these are some of the interventions the regulator is taking to help. So in terms of what the new legislation is bringing on board, we all know that most countries around the world, agri insurance is subsidized, but not in Ghana. And globally, according to the Global Index Insurance Facility, agri subsidy costs about $20 billion per annum. So if you look at section 210 of our new legislation, it talks about index insurance contract and the fact that a liability of an index risk should have been triggered by an index before it can be paid. And the amount to be paid should be determined by one or more indexes rather than assessing the actual loss. And the payout is supposed to be compensation based and not necessarily on indemnity based. Also, the new Insurance Act has established the Agri Insurance Fund. This fund is supposed to mobilize funds across stakeholders to be able to subsidize agri insurance products. The people we expect to get the funds from are the insurance companies and the reinsurance companies. Sometimes you may get money from government, and maybe the commission will also contribute something to the fund just to help grow the fund. And when we get these funds, what we are going to use the funds to do will be to subsidize agri premiums, to also train agri extension officers and other information disseminators on agri related insurance. We are also going to engage in capacity building for state institutions to provide consistent and reliable data for product development. We also invest in technology to disseminate information on agri insurance and any other relevant activity we deem fit and we believe is going to help in the course of developing and improving agri insurance in Ghana. Thank you. End of my slides.
Thank you very much, Abdul. That's very helpful. And I think that it really shows us, I want to highlight a couple of things here for the benefit of time. One is like, I want to show you all that Kenya, Zimbabwe, and Ghana are really in different stages of development of index insurance, or like exposure to index insurance. In Kenya, we have seen that they have been like different schemes, and here in Kenya, as Abdul was saying, is something that it's really like happening, and there was a way to address some of the risks that were emerging. So just want to flag that, depending on the level of exposure and development of a certain innovation, measures might be different than others. And the second point is related about the conduct market issues that you highlighted, the complexity of the product, the cost basis risk that create a topic of regulation, of reputation. And maybe something else that I think that is very important in one of your slides. You mentioned that this business needs to be done as a proper business, not like a side business. And this is where I want to make the link between designing products jointly and supporting the providers, so they see that there is a business case behind this, has an impact on consumer protection. Why? Because if consumers are not delivered with products that have value for like for long time, not just like during a pilot, that will create a reputational issue for insurance. And I will tell you a very quick experience. In Bangladesh, we were in 2019 doing like some focus group discussions, and we found that actually people were very frustrated with like several pilots on index insurance actually that have been like offered during a certain periods of time. They were like, they come here, they offer a product for 1 year, and then they disappear. And when something happens, I thought that was insured, but I wasn't. So that is effectively the impact as well of not having a business case that is very strong there. So thank you very much. I think that, as we said, we're going to share these presentations with you all. I'm just going to get back to our presentation. And actually what we are doing now is to try to learn from all these lessons that have been shared by Kenya, Zimbabwe, and Ghana, and try to put ourselves in the shoes of a supervisory authority that is now engaged and is now in a similar situation with index insurance. So we're going to look at ways on how we make sure that for these kind of products that are very innovative and sometimes use like digital technology as support. If maybe you could mute yourself, thank you. We want to make sure that during all this process, there are the elements that probably the regulation could create unintended obstacles are like removed, but through a proportional manner. So we're going to see how all these elements relating from risk carriers, distribution channels, the design of the product, the communication of the information, the disclosure of that information, the provision of consent, the claim settlement, etc. All of these needs to be provided in a responsible way, but also in a way that's really aligned with the particularities of the client. In order to do that, I will share with you a case study. I think that I would suggest that the groups that will be created, there will be 3 groups. Do not spend a lot of time in context, just read this very quickly. but really focus on the particularities of the smallholder farmer of Tralaland. So who is this product tailored to? These slides, you're going to have them during your conversation, so make sure that you get acquainted with those particularities. And very importantly, focus on the role that women play in that sector and these particularities as well as a consumer. And what we're going to do actually is to kind of role play here. Imagine that you are in a situation where like there is an insurance company that comes with a product with the features that we are seeing in the screen. You're going to have the time to discuss this with your team. These products actually have like particularities of what we have heard from Zimbabwe, Kenya, and Ghana. So that's not very new. And also we picked some questions actually from the case study that was shared yesterday by Kofi. So there are elements of digitalization there. So just have a look at this, that's very important. And look at the regulatory elements of the country, of Tralaland, and try to solve the case study considering that. So basically, please focus on the particularities of the product, particularities of the target market, and the regulatory features. We will split very soon now in groups. Each group would have to respond to some of these questions. Those questions, to respond to these questions, please really use the templates that have been provided. And as I said, for some groups, there will be important to really get back to the particularities of the farmer and the particularities of the product. So I know that actually we have quite a limited time. I would suggest that we start already the activity, and I will give like, I would say 15 minutes for discussion, but really only 15 minutes, and we can come back and get into the discussion. So maybe Rachel, if you help us to send everyone to the respective groups, thank you.
Yes, of course. The rooms are opening now. The link to the template is in the chat, and I'll send it again to each room.